In the world of finance, investors are constantly seeking safe havens for their wealth, especially during times of economic uncertainty. This pursuit of stability and growth has led to a notable trend: the movement of precious metals offshore. Savvy investors are increasingly turning to gold and silver, moving their holdings to international vaults and jurisdictions, creating a modern-day gold rush with a global reach. This surge in offshore investment is not driven by mere speculation. Instead, it is fueled by a confluence of factors from record-high gold prices to escalating geopolitical tensions. Investors are recognizing the enduring value of precious metals, particularly in a world grappling with inflation, interest rate volatility, and the looming threat of recession. This essay will delve into the key reasons behind this growing trend, examining the economic forces at play, the benefits of offshore investments, and the long-term outlook for precious metals in an increasingly unpredictable world. As we navigate these turbulent financial waters, understanding the motivations behind the offshore gold rush becomes crucial for both seasoned investors and those seeking to safeguard their wealth. The price of gold, often seen as a barometer of economic confidence, has been on an upward trajectory, recently reaching record highs. This surge is not merely a blip on the radar, it signals a potential fundamental shift in the market. Experts attribute this price surge to a potent cocktail of economic anxieties, including persistent inflation, concerns over a potential recession, and geopolitical instability. Renowned investors and analysts alike have sounded the alarm about the fragility of the current economic landscape. Jeffrey Gundlach, CEO of Double Line Capital, a figure often dubbed the Bond King, has made bold predictions, suggesting that gold could reach an astonishing $4,000 an ounce. This forecast underscores the growing belief that traditional safe havens, such as government bonds, may not provide the same level of protection they once did. This surge in gold prices is not just a Western phenomenon, demand is soaring globally. The World Gold Council, a leading authority on the gold market, projects significant growth in India's gold market, a nation with a deep-rooted cultural affinity for the precious metal. This global appetite for gold further reinforces its status as a safe haven asset in times of economic turmoil. The decision to move precious metals offshore is not solely driven by the pursuit of higher returns. It is also a strategic move to enhance portfolio diversification, reduce political risk, and gain a greater degree of privacy and asset protection. Investors are increasingly wary of concentrating all their assets within a single jurisdiction, especially in an era marked by political and economic uncertainty. Offshore jurisdictions, particularly those with a robust track record of economic and political stability, offer a compelling value proposition. They provide a layer of insulation from the domestic economic and political headwinds that can erode wealth. These jurisdictions often have stringent banking secrecy laws and regulations that safeguard the privacy of investors, shielding their assets from unnecessary scrutiny or potential confiscation. Furthermore, offshore storage facilities are renowned for their stringent security measures. These high-security vaults are specifically designed to safeguard precious metals, employing state-of-the-art technology and multiple layers of protection to mitigate risks, such as theft, natural disasters, or political upheaval. This combination of diversification, security, and privacy makes offshore storage an increasingly attractive option for investors seeking to safeguard their wealth. While gold often steals the spotlight, silver is quietly emerging as a contender with the potential to deliver outsized returns. This isn't just about its safe haven appeal. Silver's unique position as both a precious metal and an industrial metal adds another layer to its investment thesis. As the world embraces technological advancements and transitions towards green energy, the demand for silver is poised to skyrocket. The current gold-to-silver ratio, a metric that indicates how many ounces of silver it takes to buy 1 ounce of gold, is historically high. This suggests that silver is significantly undervalued compared to gold. Sean Kunkun, CEO of Dolly Varden Silver, a prominent figure in the silver market, argues that this disparity, coupled with silver's surging industrial demand, makes it a compelling investment opportunity with the potential to outperform gold in the coming years. This potential for silver to outperform gold, combined with its own safe haven attributes, is attracting the attention of seasoned investors. reports suggest that wealthy individuals and institutional players are diversifying their precious metals holdings, shifting from gold to silver, recognizing the unique upside potential this lustrous metal offers. Section 5. Economic turbulence, navigating inflation, interest rates, and recession fears. The global economy is currently grappling with a perfect storm of economic challenges, fueling the flight to precious metals. Inflation continues to erode the purchasing power of fiat currencies, prompting investors to seek assets that retain their value over time. Central banks around the world are caught in a delicate balancing act, attempting to tame inflation through interest rate hikes without triggering a recession. This economic uncertainty is pushing investors towards precious metals, historically viewed as a hedge against inflation and economic downturns. Unlike fiat currencies, which can be printed endlessly by governments, precious metals have a finite supply, making them less susceptible to inflationary pressures. Moreover, the Federal Reserve's recent acknowledgement of sideways inflation, where prices remain stubbornly high despite efforts to curb them, has only added to the market's unease. This uncertainty, coupled with fears of a potential recession, is driving investors to seek the stability and security that precious metals offer. Section 6. A safe harbor in the storm. Precious metals as a hedge throughout history. The allure of precious metals is not a recent phenomenon, it is deeply rooted in history. For centuries, gold and silver have served as a reliable store of value, weathering economic storms and retaining their worth even when other asset classes falter. This historical precedent is a key factor driving the current surge in demand for precious metals. Throughout history, periods of economic turmoil, war, and political instability have consistently witnessed a flight to the safety of precious metals. From the fall of the Roman Empire to the Great Depression, gold and silver have acted as a safe haven, preserving wealth when all else seemed lost. This historical context is not lost on today's investors. As we navigate an era marked by its own set of unprecedented challenges, from geopolitical tensions to the lingering effects of a global pandemic, the enduring value of precious metals as a hedge against uncertainty continues to resonate strongly. Section 7. Stability versus volatility. Contrasting precious metals with traditional investments. In contrast to the relative stability of precious metals, traditional investments like stocks and bonds are inherently more volatile. Stock markets, influenced by a myriad of factors ranging from corporate earnings to investor sentiment, can experience dramatic swings in value, exposing investors to substantial risks. Bonds, while generally considered less risky than stocks, are not immune to market fluctuations. Rising interest rates can erode the value of existing bond holdings, leaving investors with losses. This inherent volatility of traditional asset classes underscores the appeal of precious metals as a way to diversify portfolios and mitigate risk. Precious metals, particularly gold, are often negatively correlated with traditional asset classes. This means that when stocks and bonds decline in value, gold tends to rise, acting as a buffer against losses. This inverse relationship makes precious metals an effective hedge against market volatility, providing a level of stability and security that is hard to find elsewhere. Section 8. Market reactions and global influences. Recent events shaping investment strategies. Recent events on the global stage, from geopolitical tensions to shifting economic policies, have further fueled the momentum behind precious metal investments. The US-Ukraine conflict, with its far-reaching implications for global stability, has injected a significant degree of uncertainty into the market. Investors, wary of the conflict's potential to escalate and disrupt global trade and supply chains, are seeking safe havens for their wealth. Precious metals, with their intrinsic value and historical resilience, offer a sense of security amid geopolitical turmoil. Furthermore, the U.S. economy's contraction in the first quarter of 2025, a potential harbinger of a looming recession, has heightened anxieties among investors. This economic slowdown, coupled with persistent inflation and the Federal Reserve's ongoing battle to control it, is driving investors towards the relative safety and stability of precious metals. Section 9. A golden future. The long-term outlook for precious metals. The long-term outlook for gold and silver remains positive, underpinned by a confluence of factors. Persistent inflation, fueled by unprecedented levels of government spending and loose monetary policies, continues to erode the purchasing power of fiat currencies. This inflationary environment is driving investors towards tangible assets that retain their value, with precious metals emerging as a prime beneficiary. Moreover, global debt levels are at staggering highs, raising concerns about the long-term sustainability of the current financial system. This debt burden, coupled with geopolitical uncertainty and the potential for future economic shocks, creates a favorable backdrop for precious metals to thrive. As we look ahead, the factors driving the demand for precious metals show no signs of abating. In this environment of economic uncertainty and geopolitical risk, gold and silver are poised to play an increasingly vital role in preserving wealth, offering investors a safe haven in an increasingly turbulent world.